We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Gregor Gregersen, founder of silverbullion.com.sg and The Reserve. How are you today, Gregor?
I'm good. Thank you for having me.
Great to have you back. So, considering that you run, basically a bullion reserve, why don't we start with getting a little bit of a picture of demand for the last year? Have you seen a new high watermark in the last couple of weeks, or more international orders as we've seen all of the political instability around the world?
Oh, definitely. I mean, in terms of silver and gold, there's definitely a lot more demand coming up now. We've seen quite a big spike from Europe and from Canada, of all places. And our theory is, it's a blockade and the fact that the Canadian government actually started freezing people's bank accounts for protesting. I think that's sort of a dangerous precedent that makes people feel uneasy. So I think gold and silver is one of the natural places to go when people feel uneasy about that.
Mm-hmm. Well, it's interesting. I've kind of had this discussion with a couple different guests and thinking about, let's say, that precedent that really sets for the world. Do you think that there is a chance that other leaders follow that kind of model now because that precedent has been set?
I think so. I think it's sort of convenient. The problem is, I don't think the people doing that realize what they're doing. Mm-hmm. I think it's just convenient to say, we can do it, therefore we're doing it. But I don't think they realize, that by doing these sort of things, we are sort of destroying the trust people have in either the government or the banking system. Mm-hmm. And, when a government starts saying that whenever my citizens do something that I don't approve of, even though it's not necessarily illegal, and I'm going to freeze all your money, I mean, it sets a bad precedent and definitely destroys the trust. And we have to remember that because our currencies are all based on fiat, meaning there's nothing behind it, the only thing that's backing them is trust. Mm-hmm. So it's a very dangerous game, I think, to play with the trust. So I think it was a mistake. Mm-hmm.
Yeah, it's interesting to kind of think about, let's say, the ramifications of that. I heard that there was something like $30 billion of wealth that almost instantly left Canada. And even though obviously it wasn't covered very well, it had kind of triggered a bank run. And there was a bunch of banks that actually had shut down and had, all of a sudden had mysterious interruptions of service to, let's say, maybe limit that.
You mean people couldn't get also money out of the ATMs and limits like that? Yeah,
they weren't working.
Well, if you go to places like Italy, my parents live in Italy, and it has become a real difference between physical cash and cash in a banking account, mm-hmm. because you can only take a maximum of 1,000 euros per week, and so. Other people are not going to give you cash because they don't want to be known of retrieving too much money, because the government is saying, why should you have so much cash? Mm-hmm. Are you paying somebody illegally without reporting it? So unfortunately, we are getting into this new world where having something in the bank account and having physical cash are becoming almost like the physical gold and paper.
Yeah.
In this case, it's papers and numbers somewhere. Mm-hmm. So it all comes back down to counterparty risk. And I mean, so at the end of the day, it all comes back down to the very reason why we started silver bullion in the first place, mm-hmm. To reduce or minimize counterparty risk and give people an option to store their gold and silver in a safe jurisdiction.
Mm-hmm. Yeah, it's kind of, interesting to think about that comparison between cash in a bank account and cash in, let's say your desk drawer at home. The cash in your desk drawer still has a little bit of a fire under it that's burning away at it, but the cash in the bank account can be held back just by a keystroke in some ways, right?
Well, the cash in the bank account doesn't exist. Once you give it to the bank, it's no longer yours. The bank has to keep about 10% in reserves, but the rest, they can do whatever they want with it. If they make a loan, right, through fractional reserve banking, they can basically multiply that money 10 times and give you a loan. So essentially, you're an unsecured creditor for that cash. Now, in reality, the government will probably just print more money if the bank goes bankrupt, as we saw in 2008, since that's sort of the fashion nowadays. But of course, that only shifts the problem to the value of the currency. But I guess we are preaching to the converted already. So
that's a good point.
Yeah.
So getting back to, let's say, bullion, what have you seen premiums do in the last month? Have you seen them jump up quite a bit?
Not so much for us, because we end up selling a lot of LBMA bars nowadays. So we sort of ended up having a bit of a different dynamic here in Singapore compared to what's happening in the United States. So typically you will see coin premiums going up, right? But what's happening over here is whenever the coin premiums are going up, essentially it's very hard to get any coins out of North America anyway. So we're not really trying because the premiums are too high. In our case, we get quite a bit of sovereign coins from England. So British Royal Mint coins, basically. And we're getting sourced directly from the mint, so the premium remains the same for us. And LBMA-wise, we're still quite okay. So premiums have been, relatively stable so far. So not too bad yet, at least.
So as we're talking about let's say the inflationary aspect of holding cash, since the last time you and I spoke, which was almost a year ago, surprisingly, we've seen inflation really accelerate. So how do you see the risk of the dollar losing reserve currency status? And does this affect not only the US, but the whole world?
So I think that's a certainty. I mean, if you look at Ray Dalio, I love this chart where he shows, the last 5 reserve currencies, and they usually last between 80 to 100 years. And depending when you see the US starting, Ray Dalio puts 1920 for that. The US now is at over 100 years. But besides that, I think the key issue is the United States dollar had a big confidence crisis back in 1981, 82, right? That's when Volcker basically came in and raised interest rates to 21%. And that was sort of, a tough Iron Man who kind of said, we are going to keep the value of the US dollar no matter what. And it basically convinced people that the US dollar does not need to be backed by gold or something tangible, because the United States is standing behind the dollar and is going to keep it strong. And if it means kicking people out of a job and making mortgages, unpayable at 21%, so be it. Now, I think we're at the same stage. I mean, inflation, right? It's at the same rate right now where it was in the early 80s. It's a danger zone. And there's no way that the Federal Reserve is going to raise it anywhere close to 21%. I think we can be completely assured that they will always raise it too slowly. So I think there's just not the political will to say the United States dollar ought to be a strong currency. I mean, right now we've got the modern monetary policy theories, which are saying that it doesn't matter how much money you print. The more debt, the merrier. I mean, and as a politician, what do? You can say, yeah, great, I agree, doing what's best for the country by spending as much as we can. So I think that if we would have Volcker around, like we did in the 1980s, and we were back at that time, when, by the way, the United States had only about $400 billion in official debt back then, as opposed to now. And I think I did a calculation. I think nowadays the rate of debt increase has increased by 1,400 times. That's how much faster we're increasing debt right now. What took 195 years now takes 50 days, to accumulate debt-wise. So this is sort of leading down. There's no good ending to it, because there's no willingness from the politicians or the Federal Reserve to do something serious about it. And I think what we're seeing in the US, in Russia right now, and with China, in many ways, with Russia having been kicked out of the SWIFT system, they're being forced to do things in a different way now. And China obviously is backing Russia. Russia would not have invaded if China would not be assured them that they will not be following the sanctions. Because they're not following, China is, I think, the big benefactor of all of this, because now Russia is selling the nickel to China because nobody else will buy it. And then China can sell it to anybody else at the crazy $35,000. Nickel is up 33% right now. Mm-hmm. But I'm sure the Chinese are buying at a much lower price. And China now has a lot of control over Russia, right? And I think in the long term, China basically is looking at sort of making its own parallel financial system. And that might very well be how the United States dollar ends up, ceasing to be the main reserve currency the way it is now. So I think that, it's always hard to predict these things, but within this decade, we are going to see, I think, some very big changes. Mm-hmm. And when those changes are going to happen, people who have physical gold and silver are going to do very well.
So as we think about those, let's say those drivers for inflation, as the markets opened last night in Asia, for me, of course, we're speaking on the Monday morning of March the 7th. So as the markets opened last night for me, we saw the oil price get slightly over $125 a barrel. It's since pulled back slightly, but how do you see energy prices rising like this affecting the price of gold and silver? Does this just cut into the producer margins, or does it help drive a higher metal price?
My gut feeling is that gold and silver prices ought to be much higher than they are right now. And my gut feeling is that they're being kept lower because gold and silver has always been a barometer of trust in a currency. When gold goes up too much, then the markets get jittery, and people tend to sort of invest in things that are going up quickly. And, like I showed the chart earlier with you, it seems like every time silver is on an uproar, like it did when the Ukraine was invaded. I mean, silver was up over $1 in one day, right? But then suddenly it started crashing down. And there's just no good explanation why that should happen. So my gut feeling is that overall, the price of gold and silver being kept lower than they should be in a normal market. And in many ways, I mean, it's not a bad thing for people who want to purchase physical gold and silver, because the majority of people don't care about gold and silver. Mm-hmm. They still don't do. People care so much more about Rolex watches than they do about gold and silver. So, which means that at one point, once people start caring or start understanding some of these things are in play, and they start buying the physical, then prices really can't be kept in check the way right now. But the way I see it, they're much lower than they ought to be.
Mm-hmm. Mm. So, considering that the current state of the world, we've kind of touched on what's happening in Canada, what's happening in Russia and Ukraine. Can you make the argument for us on why we should store bullion, let's say, in Singapore, considering all of the craziness that we have seen here?
Yeah. Well, the way I look at it, there are only two places nowadays where I think will be viable places to store gold and silver for the long term. I mean, I'm talking 10, 15, 20 years. And keep in mind, people who are storing with us, they're not doing it as an investment as much as they're doing it as a kind of wealth insurance. So the idea is you buy physical gold and silver. We don't owe it to you. We sell it to you with an invoice. So that bullion is your private property. You just act as an agent who stores it for you. We insure it for you. We authenticate it for you, making sure it's real and guarantees that. And then what we do is we are a local Singaporean company. So we've been very careful not to have exposure back to the United States, to Europe, or really to any other country in any material way. Mm-hmm. So that if we see a repeat of the nationalizations that we had in the United States, for example, in 1933, we as a company don't have to follow through with it, because we can say this is a foreign country. Now, if you're storing your gold and silver with a global storage company, which almost everybody does, since these companies are going to have to follow US law. And it doesn't matter where you store, because if the company has a force majeure clause claiming that any government, on nationalization, I have to follow and you cannot sue me, you're in that situation. So why Singapore? I would argue that Singapore is probably the last place that would ever nationalize. And there are three basic reasons behind it. The first one is that Singapore is a very wealthy country. It essentially tends to have budget surpluses almost every year. It does not really have much unfunded liabilities. As you're aware, in the United States, we're talking about close to $30 trillion in debt, but then the unfunded liabilities are much more than that. We're talking 80, 90 trillion, whatever that number is estimated to be. In the case of Singapore, the pension system is fully funded. So when I'm putting money aside, that money goes into the pension system, and I can only take out what's in there. I can use that money to pay my mortgage, which is great. And the government, whatever is left there, it borrows it and it puts it in these big sovereign wealth funds, and it invests it in various countries. And then from that return, basically comes back into you. Make a long story short, if you look through CIA websites, it actually shows Singapore having a big debt, but that's because they're not netting out the actual assets that Singapore has. Once you do that, you will actually see that Singapore is really in a very, very good position. It's one of the richest countries in the world per capita, basically. So they're rich. And if you're rich, you normally don't need to nationalize because that's based on lack of confidence in your currency, which is because you've overprinted and have lots of debts, basically. The next big factor is the success of Singapore is not based on natural resources. This is a 720 square kilometer island, basically. But it's all based on good governance. And so the Prime Minister of Singapore was saying the most precious asset we have is the confidence people have in us. And so over time, over and over, you've seen that for Singapore, the law counts and private property is a holy thing. You would also find the Heritage Foundation, which measures economic freedom. Singapore is number one in the world. So it's a great place. And the government knows very well that if you were to nationalize gold, it would be like economic suicide. So they don't have a reason to do it. If they do it, it will be extremely bad for Singapore economically. And then thirdly, Singapore is actually very well defended. It's a city-state, but it can mobilize over 900,000 troops if it needs to. We have a draft of 2.5 years. On police as well, until age 40, they have to go back to the military every 2 weeks, for 2 weeks per year. And the military budget in Singapore is 3 times that of Malaysia, which is the next big country. The Singapore Air Force, is almost as big as the German Air Force. So Singapore has military bases in Australia, in Taiwan, in India, in Thailand, in the United States for training, and a few other places I forgot. So even exports have a defense industry and exporting military material. The US Marines almost ended up acquiring a Singaporean amphibious assault vehicle. It was between that and a vehicle by BAE from England. So, but it basically is considered a medium-sized power, even though it's just this little city-state. So again, it's very much like Switzerland in that it's a neutral country, but it's also well defended. And its reputation, it's the most important assets that it has. So once you put these things together, and the fact that it's very well run, it's probably the best, or one of the best places to store gold and silver for the long term.
And Gregor, as we kind of, let's say, put those pieces together, storing bullion in Singapore in that sovereign jurisdiction. How does the cash token help solve some of that jurisdictional risk as well?
So cash is CACHE, different from cash, and it's a separate company from Silver Bullion. But essentially, with cash, we wanted to create a gold token, which is extremely transparently backed with gold that you can redeem at any one location. And the system we're using to track this is called GramChain. We have it deployed in Singapore in our world, but now we also have it deployed in Zurich. With Loomis, we have it deployed in Dubai, in Dallas, ideas in Dallas. We'll have Frankfurt joining in soon. And the idea essentially is that you can swap metal with it. So you could, for example, put some gold in Dallas, Texas, and swap it for gold in Singapore, or the other way around. And you can also take these tokens, and they're public tokens. They're an ERC20 standard with no hidden doors or no permissioning behind it, which basically means it acts just like Ethereum or Bitcoin. You can send it to just about anybody. And you can redeem it for physical gold. So you can trade the token itself, or you can redeem it into physical gold in any one of these locations, and sell the gold if you want. So there's always some liquidity behind it. Mm-hmm. So Cash Gold Token is essentially our attempt, to answer a question which some of our customers had, which was what good does gold do me if it's stored in Singapore and I need it right now where I am and I'm far away from Singapore? And it's not a perfect answer, but you can essentially convert your gold into CGT tokens. You can send the CGT tokens, let's say, to an ATM in Nebraska at some Walmart. You convert into Bitcoin, you get US dollars out of the ATM in Walmart. You can actually do that. Mm-hmm. Another option is, if you don't have a bank account, like some of these Ukrainians, right, which are now fleeing, if they cannot access their Ukrainian bank anymore, and they're in a new country now, and they're not going to get a bank account in their host country because it's getting more and more difficult to open bank accounts now. What do they do? Well, if you have gold in Singapore, you could swap it for gold, say, in Frankfurt right now, or as we add these other locations. So that's one of the ideas behind cash, but there's a lot more things that can be done with cash, essentially. We're keeping it separate from Silver Bullion because Silver Bullion is meant to be only Singapore jurisdiction, only gold stored, for the long term in our world, mm-hmm. whereas cash really is something that's meant for gold we stored in many places, be able to do swaps and to move things around without needing a bank account necessarily. And it is a fully regulated asset-backed token. We are a special type of token because usually you have a utility token and you have security tokens. If you have security tokens, you're not allowed to be freely tradable because you fall under central bank mandates. If utility tokens, usually the token is not allowed to have any value by itself. And the asset-backed tokens that we're having is a very special sort of category, which basically allows that token to represent physical gold. And so we think we have something very special with it, and it's slowly developing, and we're seeing where it's going.
Mm-hmm. Yeah, it just provides you, some different options to be able to, essentially move gold around without physically having to ship it, right?
Yes, that's one of the applications. Mm-hmm. You can go to cash.gold, the website, and you can see a number of videos how it works, some of the ideas that you can do with it. Once you're an ERC20 token, you can also build derivatives on top of it. Mm-hmm. So there's all kind of interesting things that could be done with it. Mm.
So considering how you have seen, let's say, demand increase since the beginning of 2020, a recent article that you wrote was stating that you had run out of storage space at your old facility. So the safe house, you had run out of storage space much faster than anticipated. So how much quicker than anticipated did you see yourselves reaching that capacity, and what was the solution?
So, well, the thing about capacity, you never know how quickly you reach it, because our market, right, is so unpredictable. I mean, if you're looking back at 2018, right, it was such a slow year for precious metals. The price didn't change much. And then suddenly, once we went in 2020 with COVID, right, our sales went up 400, 500%. Suddenly things accelerated very quickly. Our old vault had a maximum capacity of about 600 tons. But because we used quite a bit for a kind of safe deposit box, it really turned out to be more like 450. And by the time we hit the end of 2020, we are getting towards 410, 420 tons of silver being stored. So we're getting pretty close to that capacity. And we've been looking for a new vault for 2-3 years already. I mean, we knew at some point we're going to need more space, and building a new vault is difficult, because you want to find a place that's relatively decent in a safe area, but you don't want to pay a huge amount of money for it, because ultimately it's still a storage location. And then at the same time, one thing most people don't realize, what's really important for a vault is flow loading. How much weight can you put, in the space, especially if you want to store silver, because you need almost silver, and 1 ounce of silver and 1 ounce of gold, the ratio is 80-1. So you need 80 times more weight capacity or floor loading to store silver compared to gold. And so with the safe house, having learned all these things about vaulting, we knew we needed a building with good floor loading, and really high floor loading is 30 kilonewtons per square meter. That's kind of how it's being measured typically. To give an idea, car park usually is 2 kilonewtons per square meter. So 30 kilonewtons, 15 times as much. That's what we were looking for. What we managed to find was 90 kilonewtons, 90, which means we are 45 times stronger as a typical car park. The foundations of the building we have is going 100 feet underground, essentially, to distribute that weight. So it's extremely expensive to build that kind of floor loading setting. And we just got very lucky, because it was the middle of COVID now. The building was built about 20 years ago to host a giant logistic machine, a 32-meter high logistic machine for a big company, kind of like a FedEx kind of company, essentially. And they needed that kind of floor loading, and they needed a huge, I call it the huge Olympic-sized swimming pool on the roof to keep the water, to flush all that area down if some of that stuff were to catch fire.
Interesting.
Because if you're storing batteries in that 32-meter high machine, 20,000 square foot machine, and it starts burning, there's no ending to it. So essentially, you need to put these huge amounts of water on top of the building, which means this building is just massive. It has to be massive. And the company which owned it, they essentially decided that it makes more sense to have FedEx and UPS handle the logistics. And so they didn't need the building anymore. And it was on the market for 2 years, and then COVID hit, and we were basically able to buy it at 40% below cost before. We got a very good deal, and at first the building just seemed too big for us, but after seeing it, every other building seemed too small. It's 180,000 square foot. We have one giant room around which the building is built, essentially, which is 20,000 square foot, which has a 90 kilonewton floor loading. And we can essentially stack silver 12 meters high. That's about 36 foot, almost 40 foot high, essentially. And we're doing that by combining heavy-duty logistic machines along with vaulting technology. And we have 350 tons of class 2 steel, UL class 2 steel coming in to essentially assemble them into 15 class 2 vaults. And it just became a sort of bigger than life product in some ways. But we ended up being very lucky because we got the building at a very good price. Mm-hmm. And another big break was that the architect, he's one of the top architects in Singapore, actually. But he was working for a large company, and he said, "Look, you let me do that building. I'll make a really good design." I went through 50 designs until we actually came with the design you're seeing now. Mm-hmm. And he said, "I'm going to quit my job. I'll spend all my time on this. I'm going to get the best people I know. I'm going to make my own company, and this is going to be the project that's going to make me." So when you're going to a company like the one he's coming from, you have to pay 30% of the construction cost just in architectural fees. The reason we're getting such a good design and we're paying so little for it is essentially because the guy is, that's his sort of way of creating his own company. So we got a very talented team, and I'm always trying to make sure the prices don't go out of bounds, but the quality of it is going to be top notch no matter what. And so then we got lucky because I think I was very aware that prices are going to go through the roof with the amount of money being printed, commodity prices. Mm-hmm. And so we managed to lock in all the steel, the aluminum, the glass, and most of the other things we need, the onyx, last year before most of the prices went up. And then the next challenge was waiting to actually build it because there was a shortage of construction workers in Singapore with the quarantine and COVID-19. Mm-hmm. And so fortunately, that's sort of relenting a little bit. And so the construction is starting now. And of course, it took a very, very long time to get all the permits required. The building, essentially, we had to get permission from civil aviation authorities and even the Singapore Air Force, because the building essentially glows at night. So it's one of the side things. And the other things that comes out when you're building a building like this that gets people excited is people want to do the building, and they're willing to do it almost at cost in order to get it as a portfolio item. Mm-hmm. And so we're getting, really good companies working on it and doing so at a very low cost because they want to be part of building the highest capacity vault in the world. Mm-hmm. Because that floor essentially is going to give us 15,500 tons capacity, which is about 500 million ounces of gold and silver that we can store. Mm-hmm. And to give you an idea, that's more than all the silver in COMEX. JP Morgan is rumored to have 130 million ounces of silver. So we can hold 3.5 JP Morgans, essentially. It's 28% of the above ground known
silver
bullion stores, mm-hmm. according to the Silver Institute from 2021 report, I believe. So
yeah, I remember reading that in the article, and it just striking me like 28% of the above ground silver bullion that you can store in that vault. That's mind blowing.
Yes, and people of course go, why is this guy so crazy? How is he ever going to fill that up? And the reality is we don't necessarily need to fill it up. Mm-hmm. We are getting most of that capacity for free because of the flow load. Mm-hmm. Because when you can put silver 12 meter high, you almost get an order of magnitude more efficiencies than you did before. And so a lot of that capacity essentially is not costing us that much. It's sort of built into the building. That's why I say we sort of got lucky with being able to do that. And besides silver, we can use as a capacity to store rare metals. Things like germanium, indium, and so on. A lot of these metals are becoming too precious to be stored in LME warehouses, which don't have much security. But they're too bulky to be put into gold vaults. Mm-hmm. So if you have a metal which is $500 per kilo, you do want to keep it pretty safe. But again, vaults normally are not built, to store these things. But we have both. So I kind of expect to be able to fill it up with these rare metals as well. Mm-hmm.
Yeah, Gregor, it's interesting that you mentioned those. Looking around your website, I noticed that you offered some EV metals for sale and storage. So, some class 1 nickel and cobalt as well. So what is your reason for providing these, let's say, non-traditional metals?
Oh, well, that was very much thanks to Colin and some of the events that we went to at Devon Island. We essentially, it just became clear to me, I think it was 4 years ago, that nickel in particular is going to have a big increase in demand because of electric vehicles. It was very clear to me that EV cars are going to really dominate the scene as opposed to hydrogen. Mm-hmm. And at the same time, once you look into the economics of it, the class 1, which is a high purity nickel, only about 1/3 of supplies are class 1. So you can only use 1/3 of supplies for this. You can purify the nickel to become class 1, but you need about $50,000 per ton to do so. Now, the way nickel's behaving right now, it's up 30% today. It's insane for a major commodity to do that. Mm-hmm. And of course, Russia has probably a lot to do with it. But when we started offering it, nickel was at $12,000. I think now it hit about, $40,000 today, if I'm not wrong. Mm-hmm. So it's just going from strength to strength. But having said that, it's a good time to buy nickel now? Probably not. I'll rather buy silver because, again, I think silver should be so much higher as it is, or gold. Mm-hmm. But I'm a silver bug.
There's a reason your company is called Silver Bullion, right?
Yes. We had a very humble start. I started the company because I wanted to own some silver myself. Mm-hmm. And then I figured, back then in Singapore, there were taxes on imports. Why not make a company so I can claim back the taxes? Then I thought, why don't I see if somebody wants to buy it? And then I thought, what do I name it? Well, if I go to Google, what will I write? And I said, I would write Silver Bullion Singapore. So my domain name ended up being silverbullion.com.sg. I never expected it to become a company which now sold about $1 billion worth of gold and silver since we started. When I started off, I put the silver under my beds and I met people at the train station, essentially, and sold for silver. That's how it started. So it really was a big journey from that to where we are now.
Absolutely. That's an incredible milestone, Gregor. Congratulations. So what else do you plan on being able to store at the reserve, Gregor?
So the reserve has a lot of space. And as we were looking at, the bigger concept of alternative asset, it became very clear that watches, high-end watches such as Rolex, Patek Philippe, and so on, really have become an asset class in their own right. And what convinced me was a visit that was in Hong Kong, where you actually saw the second-hand sort of exchanges. And there's a lot of scarcity that's created. Some of it might be artificial, but it basically means that these watches keep on going higher and higher. And, the reality is not that many people as I would like are interested in gold and silver, but a lot of people are interested in high-end watches. And if you look at Russia right now, there was an article saying that people are going out to Bulgaria and buying high-end watches and bags and other things because they can't get the gold. So if you have a currency which depreciates, a watch has been a good investment for good or bad. So what we are thinking is we'll be setting up a watch workshop with high-end watchmakers, essentially. We have some people from Rolex. We have somebody which you can access from high complication people from AP. And we essentially will create a specialty vault where we'll have 2,000 of these watches. Each one will have its own little winder. And these watches essentially are going to be very well taken care of because, watch people are very, very worried about the maintenance of their watches. But what makes the whole thing special is that you're probably aware of our peer-to-peer system. So we essentially we currently allow our customers to take a loan if they're storing gold with us against that loan at an interest rate of, say, 4 to 5%. And we want to expand that to the watches. And in the watch industry, really, there aren't many ways of doing things. You can go to pawn shops, but pawn shops are charging you 18%. And so, and you probably don't necessarily want to go to a pawn shop. So in our case, it will be this high-end facility. It's bonded, meaning tax-free, which means that people can send watches internationally as well without paying any taxes on import. Mm-hmm. And you can take a loan against that watch. And if you have a watch with $50,000, let's say you take a $40,000 loan, and you can also offer it for other people to buy. We can say it's a $50,000 watch. I'm selling it at $70,000. Somebody interested, send bid. So over time, we expect to be having quite a collection of high-end watches, and get people who are interested in watches to actually come to the facility as well, and really gives these watches more of a investment asset status than it is right now. Mm-hmm. And that is getting a lot of people excited. And so the way I think about it is, if I can bring these people to the reserve, to the facility, and say are going to look into this huge vault, because at 24-meter height, we're going to have some windows looking into the main vault. Chances are they might also start investing into gold and silver. And so it's a way to get more people into physical metals, and it really kind of sums together, like the different parts once put together become more than the parts separately. Mm-hmm. In addition of that, we also have the right facilities with catering and so on, so that we can most likely do auctions and we can store art and so on. And there's a lot of art which is leaving Hong Kong and is looking for a new home, and Singapore is an obvious place. So we're hoping to be able to store some of that as well, because we have 180,000 square foot. So even after our 15,000 ton capacity, we still have enough space to do these other things. Mm-hmm.
So while we're on the topic of, let's say, alternative assets, something we don't touch on very often on the show is the let's say the investment case for platinum and palladium. So can you kind of run us over that, Gregor? And do you look at the ratios, let's say, compared to gold or other factors on how you look at the value of these other metals?
So as we all know, I think platinum used to be the most expensive metal, right? When you get your cards, you always get silver, gold, and then platinum. Platinum was the highest. And nowadays, gold was almost twice as expensive as platinum. So obviously something happened to platinum. From my understanding, it's not supply, because supply of platinum is not doing well. Mm-hmm. So it must be demand. And the only explanation I have is that platinum is used for catalytic converters in diesel cars. And, the whole Volkswagen debacle about diesel being dirty and so on, suddenly a lot of appetite went away from diesel cars. And I guess people just sort of assumed we don't need as much platinum anymore. And, that might be true or not, but that's also the only things that kind of make sense to me why platinum is so low. Mm-hmm. And then on the flip side, palladium is used for catalytic converters in gasoline engines. And so I guess people sort of started pulling that up. So I'm not as much as an expert on these actual numbers, but that's sort of my understanding of it. If I had a choice, I would rather buy platinum over palladium, just because of the prices. I tend to prefer whatever seems to be cheap based on the ratios historically, mm-hmm. And then wait for it to switch over and then either sell or switch into the other metal.
Mm-hmm. Mm-hmm. So what other assets do you like to be able to, let's say, maximize your growth in inflationary times like this, Gregor?
Well, I think it's a very personal thing. Mm-hmm. I think people should ultimately invest in what they understand and know. What I try to tell people is that you just can't go wrong where we are today to put some of your money into gold and silver. So it doesn't mean you have to put everything. But, until the 1980s, there used to be the saying, put 15% in gold and silver and hope you never need it. And we've forgotten about that. But I think it's more important now than ever to sort of remind that. And so I will definitely say, put some of your funds into that. Now, if we are going into a period of stagflation, which is where I feel we are headed, because that's sort of, you go back to the late 1970s, that's where we were, right? Stagflation means we have low growth and we have rising inflation. And that's kind of what economists, fears the most in central banks and so on. And oftentimes it's because of a lack of confidence in the currency, which is, I think, where we are heading, right? And in that environment, it becomes really difficult, because if you buy bonds, you can be pretty sure that your actual purchasing power will decrease, because that interest you're getting probably is going to be lower than the inflation. If you buy real estate, which normally you would think might be a good buy, the problem is the price of real estate tends to be very highly correlated with interest. People can only afford a home if they can make their monthly payments. And if monthly payments are going from 4% to 20%, suddenly the price at which people can afford to buy a home has to come way down, right? So that's a problem with real estate. And with stocks, when I started in 93 to buy my first stocks, I was lucky to be able to buy stocks. I had to call actual brokers before the internet was around. But back then, it was very difficult to get any margin. Nowadays, anybody and their grandmother, open an account online and seem to be able to get 5 times margin. Or they go into future contracts and get 10 times plus, right? So there's so much of our stock market has been bought by borrowing money, essentially. And so if that interest rate goes up, it's probably also going to create problems for stocks. So given all such scenario, what you buy, well, I think it makes sense to own your own home no matter what, right? If you have a productive use for something, it always makes sense to own these things. If you don't know where to put it, well, gold and silver is a way of sort of keeping your assets sort of pretty safe until you find a better use for it. And if we really go into stagflation territory, my advice would be to definitely stay long metals. Do what you think you feel comfortable with, and don't put too much into any one thing other than metals. Yeah.
That's some great advice there, Gregor. Is there anything else you'd like to touch on before we wrap up here?
So the reserve is going to be, it's not finished yet. Essentially, the work has started, and we are due to finish by early 2023. And we'll be sending out some videos with some updates as we're installing all these things. And yeah, it's a very exciting sort of business. So let's do another sort of follow up, at some point, and then we can share some of the progress.
Excellent. Of course, your main site is silverbullion.com.sg, and Cash Gold is cash.gold. Anywhere else, Gregor? No. I think the main thing, we have the safe house is all gold. But if you go to silverbullion.com.sg, you will find all of these things. Yeah. Excellent. Gregor, thanks so much for your time today.
Yep. Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.